Who have a lot of money in the stock market, Jeff Sica and Dan Geltrude. Dan, between the debt ceiling, which is a potential negative, and of course a potential positive, and that is earnings. 86% of the S&P has reported earnings. 70+% have beaten on both revenue and expectations. Which side of this are you listening to and investing around?
Well, I'm looking right now at what's going on in Washington, D.C., because that's huge. It's huge. Why? Because these two sides, who, by the way, have no fiscal restraint at all, Republicans and Democrats, are going to try to get together and work out a deal. In my opinion, a deal does not happen until midnight before, if you know what I mean. Meaning they have to get through all their political dances in order for them to ultimately get to a compromise. They have no choice. There has to be a compromise.
There has to be. But let me just say, for the Republicans are trying to be fiscally responsible, Jeff, and yet when you look at the bond market, it is speaking volumes. The yields are moving higher, especially on the short-term part of the yield curve. And especially if you just look at the 1 month, 4 weeks, people would rather take their money out of the stock market, park it for 1 month in the government treasury world, and look at this yield at the moment. That's the 2-year. 2 years at 4%. The 10-year is more like 3.52%. But the 1 month yield is stunningly high, well above 5%. What is that saying to you and investors out there?
Well, I mean, the inverted yield curve is obviously a sign of a recession, but it's also showing we've been starved out of the bond market for so long that we really had no choice but to invest in the stock market. Now you could buy very short-term bonds, have full liquidity, and not have to deal with the risk. I think we've gotten to a point when it comes to risk reward where bonds just seem like the default measure to take to keep from the risk.
Okay, 3 month, 5.24%. You guys, the 1 month, 5.5%. But Dan, it doesn't mean that there aren't stocks that you have your eye on. I mean, you got to look at some of the ones that have hit it out of the ballpark as far as earnings are concerned. I'm thinking Palantir. This, of course, is the big data company, data aggregator, and they work for both the government and their consumer or their basic business. Their corporate business is starting to look really strong, and they're going to be profitable for the entire year. That's what the CEO says.
Yes, they are. Listen, keep in mind, Peter Thiel, one of the co-founders of this company, so you got to take him serious. Any company who is that deep into AI and having success, that should catch your attention because that's the future. They're doing military contracts, government contracts. The corporate world is looking at them. I really like this company. They're projecting to have $500 million income from operation. That's impressive.
Yeah, it's impressive. And Alex Karp, the CEO, has been sitting right in that chair, and he has very confidently said, we're going forward and we are the best in class. So clearly it's starting to pay off. But Jeff, some companies that have yet to come out with earnings. Thursday, Disney. That, of course, a Dow component. Disney was earlier down today, but it has had a pretty decent year when you're talking about 2023. You've been a longtime shareholder. Tell me what you're doing with Disney.
Well, I'm so frustrated with Disney I've owned this stock for 30 years now, so it's the first stock I bought. I am looking at a lot of things now that Bob Iger is in charge. I was a big cheerleader for him to take over, and I'm looking at they've done a lot of cost cutting. They're saving billions of dollars of cost cutting. Streaming is going well. So I think that it's going in the right direction. But they need to, at this point, they need to decide what they're going to do with ESPN. They need to decide that. And they need to decide what more cost cutting do they need to do. I find that Disney involves themselves in a lot of things that aren't necessarily good for investors.
You're still in the money. I mean, this is the 25-year chart. You're up about 160%.
I know, but the last 5 years, the S&P 500's up 56%, and we're flat on Disney.
And on top of it, both of you, we've got a Writers Guild strike. Right now, we're in the thick of it, and it could go on through the summer. I got a lot of people I know in Hollywood who are telling me it's an outrage. 98% of the writers saying we've got to be paid what we are worth. Not only that, you just mentioned AI. they need some protections against AI written scripts, don't they?
Yeah, they certainly do. Because listen, I've been playing around with ChatGPT. It's amazing what it can do. So I don't know. Maybe there's a future for me, Jeff, with the Writers Guild. I don't know. What do you think?
Well, it might, but I think the ChatGPT, it's a big issue with the Writers Guild. I'm in solidarity with the writers. I think they're starving right now, and one of the problems that I have is that they're not participating in the syndication. They're not participating in the growth of streaming. So they're worried about ChatGPT because, to me, I think it's ironic that we're even thinking of this platform that completely takes away the creativity of the
Okay, but
writers.
what about the Googles and the Microsofts of the world? They seem to be out in front on AI.
Yeah, listen, this is the race that we see now, Liz. All of these companies are trying to get to the end of the rainbow, that pot of gold. And listen, there's no end in sight. There's no limits here to what AI can do.
Well, let me give you a limit here. CPI, we are getting that number tomorrow. And this is the consumer inflation report for the month of April. And Jeff, this thing isn't coming down fast enough. The Fed has raised 10 times. Here's what's expected: up 0.4% month over month, 5% up year over year. And that's just the headline number, not even the core.
Well, yeah, I mean, think about it, Liz. Here you have a CPI report that's going to determine whether or not the Fed is going to raise interest rates, because it is the most important. It is an ominous report. If it's up, they're going to raise interest. I think it's going to pull back. And because of what's happening with the regional banks, these regional banks are on razor's edge. I mean, if rates keep going up, that we're going to see a lot more failures. So we're going to be so zeroed in on this number that nothing else is going to matter. And the Fed, really, I said last time I was on your show, they have nothing but messed up, toxic choices. That's a line from the movie American Hustle.
Yes.
They have to them, if they raise rates, they're going to hurt the banks. If they don't, then they're going to continue to see this trajectory of inflation that's crippling the consumer.
Yep, and we've got that, plus what's going on in Washington, D.C. Dan, Jeff, thank you both very much. And as we look at the clock here, we're 49 minutes.